Good afternoon, everyone. It's 5:15 on the 1st of June. I hope you're enjoying this wonderful weather. The American market looking good today. The Dow is up about 103 points. The Nasdaq, as you can see, is off a little bit. The breadth of the market is in fact indicated by the VectorVest buy-sell ratio looking quite good. The American market looking good, but as we'll see in a second, the battle of 4,200 is still raging. So this market's been stuck in this, S&P's been stuck at 4,200 for the last week. I've been in fact quite careful in the American market because of that. I want to see it break one way or the other. I've got a couple of positions running and we can have a look at those quickly and then we'll move to the UK. This is apps, and as you know, I had a great run on apps last year, and over the last little while I got stopped out of it twice. I particularly like this because it's a Gartley pattern, which is something that's been very good to me over the years. And as you can see, that pulled back to that 61% retracement in 3 waves. Maybe it takes a bit of imagination to see them, but I saw 3 waves there, and I'm hoping that it's going to move up from here. We shall see. That's the GDX, and we'll look at the gold market in a second. The gold market just pushed above 1900 a second or two ago again. That's AIG, and the AIG is one of my favorite setups, the old Wyckoff spring. As you can see, resistance came back once, went up, couldn't make a new high, and then comes back and runs these stops, and away it goes. It's in the direction of the 21 and the 55-day moving average, which adds greatly to the probability of the setup working. So with any luck, there's a decent move ahead in AIG. And that's the SPX, and that's an ugly looking candle this afternoon, right at that old top, folks. Opened, went right up there, and then has reversed. So that's a worry, and that battle of 4,200 that's been going on now for 1, 2, 3, 4, 5, 6 trading days still has not been resolved. And I've been careful in markets about adding to any new positions until that battle has been resolved. I've got a position on Disney, and again, it is a Gartley pattern, a run up, a wave A, B, wave C, down to the 78% retracement. We shall see if it works or not. I'm in the money, and my stop loss is at entry on that. I'm not going to do anything more until this battle of 4,200 resolves itself. In the UK, well, situation full of green. The UK market for once has been much stronger than the American market, and I've had lots of emails from VectorVest UK subscribers telling me how well they've done today, so that's just great. If we have a look at the shares that I've been following, I see Games Workshop has pushed up above the 120 level, and that's a really good place to be. There's no doubt, as somebody mentioned on the comments, old highs are in fact difficult places to be, and as you can see, it's been up there a few times. The fundamentals of this share on VectorVest are great, and I liked this strong thrust up. I added to it here when it pulled back to the old high, and I added to it again here. So with any luck, this bit can be repeated. We shall see. Don't avoid risk, manage risk, and that's what I intend to do. Now, Sylvania Platinum is an interesting stock because it put a lot of people on the back foot last week, because it pulled back, and it pulled back to a fairly obvious place, folks. So if we have a look, there's a trend line there that doesn't take a great deal of imagination to draw in. 1, 2, 3 touches to it, and then we've got a Fibonacci level. Oh, it's a pain. A Fibonacci level coming in at or around the same place, and as you can see, the market stopped exactly on that 78% retracement. This push-up was on rising volume, this pullback was on falling volume, and then we had this big day, and that's what Mr. Wyckoff would have called stopping volume. And we're now rising again on great volume, and somebody emailed me earlier and told me that it closed about 138, 139. Now, in the courses that I do, I do some very simple things, and I show people how to buy pullbacks to old highs. And when I talk about that at a course, people laugh at me. They tell me, well, I've seen that before a dozen times. And there's a big difference between knowing it and doing it. And judging by the number of emails that I got on this pullback, that caused a great deal of angst in the community. Nevertheless, that was the time to buy into it. And as I explained the other day, this candle pattern is a thing called a piercing line in candle terminology. In the old-fashioned bar charts, it was called a gap and snap, a high probability pattern. But this is rising now on rising volume, and commodities across the board have had a very good day today. I see the top riser on the FTSE 100 is my old friend Anglo. So that's going well. Italia Mining is still flat. Cranswick's holding on to the £40 handle. Polymetals up a bit the last time I looked. Now, Economies is a share that caused a little bit of angst over the last week or two. And as you can see, it's pulled back. And it's pulled back again to that 78% retracement. And that's why one of our subscribers refers to me as the 78% man. As you can see, during this pullback, there's not a great noticeable volume, but over the last day or two, we've got volume moving into this as the share is moving up. So I'm quite happy with that. I saw their numbers last week or the week before, whenever they put those around, and I thought their numbers were absolutely marvelous. I don't know what more the market was looking for, but we don't know what's going to happen next, folks, but this looks as if it's certainly well worth holding. Persimmons, I only bought into this a day or two ago. I see it's up 2.5% today. I don't look at them intraday, but people keep emailing me about them, and as you can see, difficult to see anything on volume here, but the market came back and we made this, again, what the candle people call a tweezer bottom, I think, and it's broken up and it's now pushing on these old highs. If we can get through these old highs, then as we used to say, the ball is in, the game is on. This is a recovery stock. It's got outstanding relative safety, but as you know, the earnings were pulverized last year. So I'm hoping that both this stock, I'm in the money in this stock by a tick or two, but Bellway also had a similar run up last week. Bellway, I'm in the share from a very long time ago, somewhere down around here, but it's charting to me this flag-like pattern, and if one goes, they all go. But I have got two building stocks because I think that both Bellway and Persimmons are great opportunities over the next couple of years. So if this breaks, folks, this flagpole should be repeated on the upside, which would take us to about £40, which would be very nice indeed. So reasonably pleased. Halma nearly made a new high today. Pan African Resources was flattish today, but I bought into it about 18. It's gone to 20, 22, 23. Lion Trust was up a little bit today, and JD Sports, a great example of a Gartley pattern, just a textbook Gartley pattern. I'm talking about Fibonacci retracements in the when to sell course next week, and that's in Pride of Place as an example of a Gartley pattern. I was sleeping, should have been into it here after that green day, but I only got in about £9, only added to it at about £9. I'm into it since last April. Way down here somewhere. Okay, so that to me is starting to break on the upside, we can get a nice move from that. So reasonably pleased with the UK portfolio. For many months, as you know, when the UK market was flat, I was making excuses about the performance, but I'm very happy as to how this has turned out. Sometimes you got to slug it out when the market is going sideways. So back to the American market, and we can see that nothing much has changed. The Dow is up 88 points. I repeat, folks, we need to get through that 4,200 level conclusively on the S&P before, and I think if we do that, we're going to see a very strong advance indeed. If we don't get through the 4,200 level, then there's a possibility of a 200 or 300 point pullback. So just be very careful. I've been careful in only having a couple of positions. There are many more that if we get through the 4,200 level, that I would consider adding into that portfolio. Don't need that many trades. These are all leverage positions for me, so I need 3 or 4 good trades a month to pay the bills, and any money I make out of that, I recycle that into the longer term portfolio. And the money that paid for that persimmons that I bought into a couple of weeks ago, that came from some spread bets. So I hope this helped a little. I've got a bit of a frog in my throat, as you can hear, and I'll do another couple of these before the end of the week. Just be careful in gold. Those of you who are getting into gold now, as you can see, and I'll put it up here, gold has in fact got up to, as you can see, sitting around that 78% retracement of this last range. There is a long-term trend line here. I wouldn't be at all surprised to see a pullback to that trend line. And the one thing I forgot about today, of course, was the oil market breaking up considerably, and that's boosted the London market. But gold is still north of 1903, and those of you that watch the silver market will know the silver market's very strong as well. I'm holding my gold positions, both a leverage position in the GDX, Polymetal, which is a great share, pays a great dividend, and Pan-African Resources, that if the gold price does half what I think it's going to do, can double or even treble from here. Thank you very much. Bye-bye.